right? So that's how basically I would mark. If you want, I can actually just recreate the process. This is your order block, and now you will extend it. Now what will you do? As I said, you will set up an alert in this area, and as soon as the price arrives and gives you a closing, that is when you will take the trade. So now what happens? The price comes here and it gives you a closing right over here, right? So now, since you will see this, you're going to take an entry, you're going to follow the same process, you're going to basically place your stop losses below the order block, and your targets will be either a 1:3 or a 1:4, or you can also use the concept of liquidity to set your targets. Now, what did I say? Where is liquidity? Above a swing high and below a swing low. So this is a swing high. Most retail traders would want to take the breakout trade over here. Our objective is to sell when retail traders buy. So this could be a good target. Now, as soon as you enter, you can see that when the price came down all the way from the top, you can clearly see that there is a volume dry up that has happened all throughout. That was the last check that we had to make. And when the prices came here, again for the next about 6 days or maybe 5 days, the price went a little sideways, right? So you entered on this day, and then for the next maybe 9 days, stock was only down 1%. But then the stock took charge, and then it again created this massive move. And just look at the liquidity point. This is the point where liquidity was lying. This is exactly where other retail traders got trapped and you got your exit. And now this is a 83% move in 26 days. The price comes back. While the price comes back, you have got another order block. So I'll just write the previous high. Another displacement with big volume. Price comes back with a dry up of volume. Body of the last red candle. Price comes up here, and price gives you a green candle closing here. So this is exactly where you will take your entry. Your stop loss is here. Now where will be your target? Your target will be above this liquidity. So that's your target, right? Above this high. And then you see that the price is almost on the path or on the track to hit your target. So how many of you understood? This is a very simple example. This is not a picture perfect example, because this is an example where I was trying to show you the reality that you'll have to maybe wait for some of the other days. Now some people are saying, will we have to wait for 5 days of stock not doing? See, if you will have a very short-term approach in your trading, you will have average results like all other traders. Most intraday traders fail, right? Intraday trading you should be doing when you've got some experience. If your objective is to make money, try to ace the simplest things first and then get into complex things, right? Now let me take another example. Let's say Bharat Dynamics, right? I'll take Bharat Dynamics as an example, and I will show you the same structure, right? So now you can see this is a very clearly identifiable order block. So you see the previous high being broken. So I'll just write PH. The previous high is being broken. Previous high is being broken with the displacement candle with good volume. Body of the last red candle before the big displacement. All of this is fine. When the price comes here, it gives me a green candle. While the price comes here, there is a volume dry up. Everything is good. I'm going to create a long position over here. So I'm just going to create a long position. That's my long. My stop loss is going to be below this. My target is going to be a 1:3, 1:4. Price actually goes down for the next 3 days or maybe 5 days, and then what the hell? Just look at this move. This stock moved up approximately 80% in 20 days. Approximately 80% move. Give me a fire or a big bull in the chat if you're understanding how this works. You have to understand that you are entering near the price range in which institutions bought. So your buying price and the buying price of the institutions is more or less going to be the same. You have to wait for institutions to act. Now you can't really time the market that when you enter, only then the next day the moves should start coming in. The move will come when institutions want that move to come. So you wait for 4 days, you get rewarded for your patience, and then the next few days of the move is just crazy and insane. Then, while this big move was being created, you can clearly observe that there was another displacement. So there's another previous side displacement that took place. This is the narrow range consolidation, which is your newer order block. And when the price comes back down to this entire area, let's see. Okay, now the price has come over here. Green candle close. Okay, here it is. I've got my green candle close. Now, while the price has approached my order block, I have a volume dry up or a decline. I'm the only person on the planet who will say buy when the volumes are the lowest. Every single other person on the planet will say buy when the volumes are higher. I will tell you buy when the volumes dry up completely, because that's the point where retail traders are out of the equation. So as soon as the price comes here, you get an entry point, good for you. So you've got an entry point over here, your stop loss is here, and your targets could be above this particular high, which is liquidity, because that's where the next breakout is going to happen. That's your target, and you see this is a complete show. So almost your target was done over here. Like even at this point, you got a 1:2.8, a 30% move in about 27 days, right? So that's also good enough. Now I'll show you EPAC durable. This is also a very good example. So let's just quickly jump into it. So that's your displacement. Your previous high got broken. This is the consolidation, the narrow range small body consolidation before the big move. You've got your big move. Just set up an alert, wait for the price to come here. So now someone is asking, will we wait for so many days for the trade to come? See, you've got 2,500 odd stocks, right? Pick up the top 800 stocks of India, right, by market capitalization. I will give you that list. Mark your order blocks, set up your alerts. How do you do that? Just click on this plus alert on this particular stock. As soon as the price comes in here, your system will automatically alert you. You don't really need to watch charts all day. You will get an alert, open the chart, see if everything is happening, take your trade. That's how smart traders do things, and that's how you leverage technology to do it. Now, the price comes right here, gives me a green candle closing. While the price is coming here, I can see a volume dry up. Everything is fine for me. I've taken my entry. My stop loss is here. My target is above this high. And then boom, in less than 28 days, I've got a 70% move. I'm not even kidding. Just look at this, right? So this is like a 70% odd move that has come up in the chart in literally no time. That's how powerful this is. Let's look at JSW Holdings, right? So let's look at JSW Holdings. Is also a very, very interesting name and interesting example to see. Look at this, okay? Very, very crazy, right? So I've got my previous high being broken over here. So I'll just write PH over here. That's the previous high. Displacement, narrow range consolidation before the break, high volume, okay, done. Price comes back into this range, gives me a green candle close, okay, done. I've also got a volume dry up, that's also done. Where's going to be my entry? My entry is going to be here. My stop loss is going to be here. My target could be 1:2, 3, 4, 5, whatever. And then just look at this, okay? So you will just enjoy this like anything. Just look at this and look at the move. 120% move in 25 days. How many of you are really enjoying this? 120% move in 25 days. Now, when the price broke another previous high, just look at this displacement. Now, the problem over here is that the volumes weren't really enough. So in this case, the volume confirmation didn't really happen. This is your narrow range consolidation. The price comes back into the order block, gives you a green candle closing right here. You can take a trade, maybe with the lower size because you did not have a volume confirmation. And then your target can again be above this high. The price comes here, and then just look at this. Just look at this. The price again moved 81% in 49 days, right? That's the power of institutional order flow trading. You can do this in Angel One, another example over here. Previous high break with good volume, right? So this is what you will see. Previous high broken, good volume, body of the last red candle, wait for the price to come here. The price has come here, green candle closing, volume dry up, price comes here, your target is above this high, the price just continuously moves up, gives you a 31% move in 26 days, you're done. So simple, straightforward, clean charts, no indicator, no pattern, nothing doing over here. You are specifically focusing on those areas where institutional activity is going to be on the higher side, and you have like multiple other examples. I'll take up now a few examples on the short side so that you can understand how to use it on the short side as well. And I will start with Bank Nifty. So I'll go to a smaller time frame now. I'm going to go to a 15-minute time frame. Let's try to understand how this works. So very simple and straightforward right over here. So let me just redraw it so you can. There are multiple places where you would have probably gotten a trade over here. So I can show you multiple examples. But let's see if you can identify the ones which are good. Okay, so let's start with over here. Maybe I'll go to a 10-minute. Okay, I'll just go to a lower time frame. Let's go to a 10-minute time frame. Now, again, you have to see simple things. Your previous low is being broken. Your previous low is being broken with big candles. Now, whenever you are dealing in the index or commodities, don't look at the volume. I'll tell you why. These instruments are traded in derivatives, right? So there are multiple futures contracts, the current month, the month ahead of this, and then there is trading done in the spot charts. There are trading done in the futures, in the option segment. So the volume doesn't really play a big role over here, since